Today we're going to analyze PayPal and if the recent price is actually in a fair level, in a fair range, after the share drops from its all-time high at around $310 by roughly 80% to its current price of roughly $57. And we see also here that actually the performance over the last years and also quarters is absolutely horrible for all investors. Before we go further into the analysis, let's quick check here also some highlights. Market cap roughly 62 billion, enterprise value 61 billion. So it's very close. That means also PayPal has a lot of cash in to pay off all the debts. Really great. If we scroll down, we see here also an overview of our snapshot from the iSqores about the value, profit, growth, and health. And this is helping you to visualize and to analyze the stock with just a click. You see where a company has its strengths and weaknesses, but later on we go in more detail. What we see here that also the valuation metrics looks really good. And that's why I'm very excited about the valuation which we come up with PayPal here. So let's go further into the financials. We see here an overview of PayPal's recent quarter. And we see here a year-over-year increase of 8% for the revenue, 6% increase in cash, and 20% in EPS, non-GAAP EPS of 20%. And we also see that there is a share buyback of 5%. But what we also see is that there is a negativity in gross margin, profit margin, and free cash flow margin. That means compared to the previous year, we see here a decline in the profitability, and we see now if this is a long-term problem. If we go in now to the income statement, click on TTM, we see here actually revenue growth. It's pretty okay, but we came from a high valuation. We came from 24 in 2021, then 1 year after only 10% and then 8%. And now we are at 7.6%. So we see a constant decrease in the revenue growth. And this is what analysts concerning and also investors are concerned about. And maybe that's why also PayPal dropped in the price by 80%. If we scroll down, we see also the profits. And here is the problem. We see a huge decrease in profitability. Each year, we saw a decrease. Only the last 2 quarters, based on the TTMs, were actually positive again. So maybe PayPal found a bottom now and makes a turnaround story. Let's see also what we find in the free cash flow. If this looks similar, if we go to the TTMs, and actually it looks similar. We have actually always a decrease over last quarters, but we have still a profitability and still free cash flow margins which are positive at least. That's why it's a mixed picture here what we have from PayPal, and that's why analysts have concerns. But with the new CEO, maybe there will be a change of Alex Chris when he turns the ship in the right direction with all his strategies he has on paper. I think soon he will release some new checkout process. I'm pretty sure he will also bring more in the trading or the trading with the stablecoin and the cryptocurrency. And also he will focus more on the checkout process when it comes to onboard new partners. But for now, let's quick jump into our iSqore. As I mentioned, this is the best overview for you to get an impression about the company's strengths and weaknesses. And actually you see here, a lot of things are green, a lot of things are yellow. This makes it actually to a very interesting company. Red and orange are something what I don't like, but green and yellow, everything is fine. And when I show you something here on these 2 graphics, then you will see directly where are the problems. The problems are that the free cash flow has stabilized and also decrease, but that's not the first decrease. We saw here a decrease here and also now, but it's stabilized, and investors want to see a constant increase in free cash flow. But the bigger problem is here with the net margin. We come here from the high in 2021, around 18%, and are now here at a level of roughly 8 to 9%. And that's the problem. This huge drop plus the stabilization of free cash flow is, I'm pretty sure, a red flag for many investors in PayPal. That's why the stock might drop this hard after it also increased by over 200 and 300% over last years. So that's why. Let's quick check also what Analyst Forecast think about the company. And based on the 12 months forecast, they suggest, or they recommend a price of $74. That's an upside potential of roughly 30%. And we see here 36% of 49 analysts say, hey, this is the buy rating for this company. But more important is for us what analysts think about revenue growth of the future. And they say, hey, we only expect 7 or 8%. And that's far below the average we saw in the history of PayPal. And that's the problem here. PayPal might be now a slow growth company and not anymore a company with high growth numbers. But this we will see now in our fair value analyzer. In this tool here, it's so simple to evaluate your company based on your assumptions. We are able to make 3 assumptions for low, mid, and high. It means you can make 3 scenarios. And the first, I always check how are the averages of the 3 and 5 here. And we see here, 16%, but also a decline to roughly 8%. That's the second time that we saw a decline to a single digit number. And that's why, which kind of number we put in here to be very conservative, but also kind of aggressive for the future of PayPal. This is here a 10-year projected analysis. So you can make here different scenarios for the next 10 years. And I will put here some numbers in which are conservative in the low. That's 7%, 10% in the mid, and 13% in the high. For the gross decline rate, I will pick only 1%. The reason here, there is a positive growth and it's not high volatile. And that's why 1% is absolutely fine to have still a simulated decline in the growth. Now we come to the profit margin. And here we have actually a pretty stable profit margin. Also, when we compare it to the history, pretty stable, that we can say, hey, actually we can pick conservative and high numbers. And let's do it here. I will go with profit 11% in the low, 14 in the mid, and I will go 17 in the high. I think this is very reasonable. Also for the free cash flow, we can choose numbers which are pretty close to the current 3-year and 5-year averages. Of course, we also saw here a drop, but this is maybe only a one-time thing. So let's put also here some numbers in which are conservative, but also kind of doable in the high range. Here we go with 14. Here I choose 17, and in the high, I will go with 20. Because, maybe they make it again to these Corona highs. Let's see. Now we come to our desired PEs and desired price of free cash flows. And here it's actually different from others. I will not invest in any company which has this high PEs. I will choose my desired PE in a very low range. This is my multiple I'm willing to pay in the maximum if my low assumptions occur. And the higher I go with my assumptions, the higher I go also with my PEs. That's why 15, 18, and 21 are very reasonable for me here. And the same, also for free cash flow. I think these numbers are also very high. But as mentioned, I will keep this number identical with the PE, as PE and price of cash flow in long term will be the same. We can see this here. They are very close to each other. And that's why I think also in the future there will come closer and closer, and I keep these as my desired PEs and my desired price to free cash flow multiples for my 10-year projected analysis. So where these numbers are in 10 years. Now we come to desired return. And this is where I put my margin of safety in. Of course, you can also put your margin of safety in here. And the thing is here, the higher you go with your assumptions, the higher margins of safety you should do. It means also higher returns, because higher margin of safety or higher returns will lead in lower prices you pay. Nothing else. If you would increase now this number, you would see a decrease in this prices. It means you have to wait until this price get reached. But I'm very happy with 10, 12, and 14 because my assumptions are here very conservative in the low and optimistic also in the high. And now we can go to the valuation. And the thing is here, based on my assumptions, I get 3 different scenarios. Low assumption, mid assumption, high assumptions. That means low scenario, mid scenario, high scenario. And what we see here, we have here a price range from $57 to $72 in the low if my low assumptions occur. In the mid, I have a price range from 86 to 105 if my mid assumptions occur. And if my high assumptions occur, I would have a range from 124 to 146. So that means PayPal seems to be right now undervalued or at a fair price. Will I invest now? Because I see everything is shining green. And also this price is very close to the current price. And at the end, I say no, I rather wait until the price will drop further, maybe to a range of 50 to 55, because also yesterday we saw a drop of roughly 3%. But if you can't wait right now, you want to invest right now, if this is your decision, you still can make roughly 11% per year for the next 10 years if your low assumptions occur in 10 years. If your mid assumptions occur, you can make roughly 17%. And if your high assumptions occur, you can make 23% per year if your high assumptions occur. So I think you see this tool is very, very simple to use. You can make 3 different scenarios based on your assumptions. And this makes this tool so special, so easy to use to get a fair value of your company you want to analyze. In this case, PayPal. And again, I will not invest right now in PayPal. I will sit on the sideline and wait until this company drops to 50 to 55. And yeah, many thanks for attention. I hope you like this video. Give this video a like, subscribe to this channel to support us here. And I hope to see you soon when we release new videos here on YouTube. Have a great day. See you soon and bye-bye.